Warren Buffett drops bombshell investment strategy for 2023. Is your portfolio ready? In a recent interview, Warren Buffett revealed the investment strategy that he believes the majority of people should be using in 2023. Buffett's approach is a radical departure from conventional investing wisdom. Will you be brave enough to follow his lead? And if you're not following Buffett's advice, you could be putting your entire financial future in jeopardy. Find out why. The markets have been a rollercoaster ride lately, and investors are feeling the heat. With interest rates on the rise and key indices down year over year, it's a bleak outlook for many. But despite all of this chaos, there are still people who can successfully navigate these perilous seas. Warren Buffett, the legendary investor, is one of them. Even so, he is aware that the situation is not favorable. It is evident that the Fed has not yet tightened financial conditions given the crash of Silicon Valley Bank and the recent restructuring of regional banks. Yet, it won't be long before they do so. And that's not all. The last time we experienced similar interest rate increases, the economy went into a severe recession. The scenario seems hopeless given that the Federal Reserve anticipates increased interest rates in the future. But what does this imply for the economy? The repercussions are important. Lower inflation and greater borrowing costs are the results of higher rates. Customer spending consequently decreases. But what about the impact on investors? Bonds might be more alluring as a result of falling bond prices, but higher saving rates might also encourage more savings. Because they must outperform greater risk-free saving rates, stocks also suffer. So how should we invest in these circumstances? Warren Buffett has the answer. His algorithm for choosing stocks has made him the most successful investor in the world. First, find businesses with durable and significant competitive advantages. Second, buy heavily when the business's economics are strong. And finally, keep your investment in place for a lengthy time. But will this be enough to survive this economic storm? The world of investing is not for the faint of heart. Warren Buffett, the Oracle of Omaha, knows this better than anyone else. His investing strategy appears straightforward at first glance, but beyond the three elements lies a critical factor: temperament. Without the right temperament, even the best stocks can lead to disaster. In a letter to Berkshire Hathaway stockholders in 1996, Buffett wrote that if a declining market would cause you to panic and sell, then you should completely avoid holding shares. But selling good companies when there's terrible news is also typically a mistake. To support this, he used the career of Robert Woodruff, the brilliant entrepreneur who created Coca-Cola and held a sizable stake in the corporation. When asked when would be a good moment to sell Coke stock, Buffett had an easy response: I have never sold any, therefore I don't know. Buffett goes on to discuss the three philosophical pillars that he uses to approach the market: how you view the market, your margin of safety, and how you see stocks as a form of business. These pillars offer significant advantages and a completely different perspective than the majority of market participants. But what about those who lack patience to deal with the market's ups and downs? In a world full of chaos and uncertainty, one man has risen above the rest to become the Oracle of Omaha, and he has a message for all investors out there. Invest in index funds. Yes, you heard it right. The man who made billions through stock picking is now advocating for a passive investment strategy. But why index funds? What makes them so special? According to Buffett, all you need to do is have faith in the long-term success of the United States and American corporations. It's that simple. To prove his point, he takes us on a journey back in time to the year 1942, when he purchased his first stock. Since then, there have been 14 presidents, a world war, and countless other events that have rocked the world. But throughout it all, there has been one constant: the success of American businesses. And if you had invested just $10,000 in the index fund back in 1942, reinvesting the dividends along the way, you would have had a staggering $51 million today. That's right, $51 million. So why bother with individual stocks? Why stress about which ones to choose, when to buy, and when to sell? Just invest in an index fund and watch your money grow. It's like buying a farm and having someone else manage it for you. All you need to do is believe in America and its future. But will America continue to advance? Will its businesses continue to thrive? Only time will tell. But one thing is for certain: Warren Buffett has made his choice. What about you? In a dramatic letter to Berkshire investors in 1996, Warren Buffett revealed his belief that the best way for most investors to acquire common companies was through a low-fee index fund. He claimed that taking this approach would undoubtedly outperform the net returns provided by the vast majority of financial specialists. But the burning question remained, to what extent did Buffett believe in using index funds? As it turned out, Buffett was a firm believer in this strategy and even recommended it to NBA star LeBron James. But was this really the best approach? And what should one invest in next? These are obvious questions in everyone's mind. According to Buffett, it made a lot of sense for LeBron James to simply make monthly deposits in a low-cost index fund, given his earning potential for the remainder of his career and beyond. In Buffett's opinion, anyone in a position to have a sizable cash reserve should do whatever makes them feel secure, and owning a diverse piece of America that was acquired over time and held for 30 to 40 years was guaranteed to succeed. But Buffett didn't stop there. He also had strong opinions on the hedge fund industry, which he believed imposed high fees that the past performance of the firms could not support. He even issued a challenge in 2008, claiming that an S&P 500 index fund would outperform a hand-selected portfolio of hedge funds after fees, costs, and expenses. A hedge fund company called Protégé Partners LLC accepted the wager for $1 million. But as the years went on, it became increasingly clear that Buffett's index fund strategy was winning. By the end of 2016, Buffett's investment in the index fund had grown by 7 percentage points annually, totaling $854,000. In contrast, the picks of his apprentice had grown only by 2 percentage points annually, or around $220,000. The fund of the funds had not been publicly identified, but it hardly matters. The game was effectively over, as declared by Ted Sides, the co-founder of Protégé, in an opinion piece for Bloomberg. Buffett had won, leaving the world to wonder, what other investment advice does this oracle have up his sleeve? Warren Buffett's small gamble had yielded undeniable proof that investing in index funds like the S&P 500 is the way to go. But it's not just about picking the right stocks, it's about having the patience to stick with it over time. By dollar cost averaging a portion of your income and regularly saving and investing, you can decrease your risk and increase your gains. But now, in the midst of the financial crisis, Buffett's advice takes on even greater significance. With inflation running rampant and the Fed raising interest rates, the economy is struggling to stay afloat. And in a market like this, it's more important than ever to know what you're doing. Luckily, Buffett has some wisdom to offer. According to the legendary investor, success in the stock market comes down to 2 things: assessing the value of a company and understanding your own perspective on the market. It's not about fancy financial theories or complex algorithms. It's about knowing your own limitations and staying focused on what you do know. The world is in dire economic circumstances, but Warren Buffett has some tried and true advice that could help you survive. Market downturns present a chance to stock up on top-notch businesses, and when the Dow drops, the market always rebounds. Now is the perfect time to buy stocks. But what about investments in an inflationary period? Warren Buffett's advice is simple yet strategic. First, research the company you plan to invest in and consider them as components of a larger entity. Look for businesses that are well suited for an inflationary economy, such as those with pricing power that can raise prices quickly without losing market share or unit volume. Apple and Coca-Cola are examples of companies that have this ability, making them less susceptible to the effects of inflation. Secondly, focus on businesses that can handle significant dollar volume increases without requiring a lot of additional capital expenditure. This means finding companies that can create more income with less investment, such as tech behemoths, which can develop new features for less money than a car manufacturer like Ford. But what about overall market performance? In an inflation-affected market, Warren Buffett advises that it's best to focus on the company rather than the market. This strategy can help you succeed as an active investor. Warren Buffett's advice has worked for decades, but will it work for you? The Oracle of Omaha, Warren Buffett, has spoken. He knows the secret to success, and it's not what you might think. It's not about buying gold or investing in non-producing assets. No, the key is to invest in yourself, to hone your aptitude and abilities and watch your income skyrocket. But that's not all. In a world plagued with inflation, how do you safeguard your investments? The answer is simple. Invest in firms that require no maintenance and capital investments. Interest rates control everything, and if they're high, your investments will lose value. But don't be fooled into thinking that bonds are the answer. Even though they may seem appealing in this circumstance, stocks still reign supreme in high interest rate environments. And as for those who choose to shy away from holding assets voluntarily, Buffett has one word for you: silly. So what are you waiting for? Follow Oracle's advice and watch your investments soar to new heights. And if you're looking to get started in investing, take Buffett's advice to heart and focus on low-cost index funds. As always, be sure to do your own research and consult with a financial advisor before making any investment decisions. If you found this video helpful, please give it a thumbs up and share it with your friends and family. And don't forget to subscribe to our channel for more updates. Thank you for watching, and we'll see you in the next one.